There's no question that animal spirits have been unleashed a bit post the election. Stock market's up a lot. Household and business confidence has increased significantly. There's a survey of small businesses that showed a very large increase in December, and it sustained that increase in January. So there's no question that sentiment has improved quite markedly post the election.
And that animal spirits, whatever, that market influence, it transmits itself throughout the total economy, doesn't it?
Well, we would expect to have some consequence for economic activity, but we'll have to see if that actually, if the confidence is sustained and whether it actually materializes in terms of increases in spending. I would say so far we haven't seen much effect of the improvement in confidence actually leading into greater spending. I think the economy is still on about a 2% GDP track, which is about what it's been over the last year or so.
When you hear the president looking for 3 to 4% and the Treasury Secretary looking for 3 to 4% economic growth, admittedly not next week or next month, maybe not even next year, but as a medium-term, longer-term goal, do you find that acceptable?
I think it'd be great if we have 3 to 4% GDP growth, because that would mean the productivity growth was very strong, and that would lead to rapidly rising living standards. So that'd be good for everybody. The key is what actually happens to productivity growth.
Do you find 3 to 4% realistic? Maybe that's a better
I would say it's possible. In other words, we had productivity growth back in the late 1990s, where productivity growth was averaging over 2.5% a year. If we could get back to that kind of level of productivity growth, then I think 3% plus growth would actually be achievable. But that's a pretty high standard to reach for.